then we can answer all the questions at the same time. Just make it easier for us to go through the presentation. So what we'll be covering in this presentation is just the key investment highlights, the investment overview, the investment characteristics, our partners, as I mentioned earlier, and the next steps should you want to invest, as well as the disclaimer. So the key investment highlights. So the cattle investment is a SARS accredited Section 12J investment opportunity, which aims to invest in established seasoned feedlots in South Africa, such as Beefcor. So just the highlights of the investment is you get an upfront tax relief of up to 45%. So the tax relief is dependent on the tax bracket that you sit in. So the highest tax bracket in South Africa is 45%. The targeted return for this investment is 20% per annum, and it has a defined exit mechanism, which is through selling of the cattle to the partner feedlots at the current price, whatever the current price is when we sell. It has a liquidity event every 4 months, which is something that I'll explain in the next slide. And it is an asset-backed investment. So it's an actual physical asset, and it's not a virtual asset. So it's tangible and you can touch it and see it. And this investment gives you exposure to the key defensive sector, which is agriculture. So I'm sure a lot of you that went through lockdown know that you didn't eat less during lockdown. If anything, you probably ate a little bit more. So, and then the partnership with established feedlots with over 30 years of experience, which is something that Isak from Beefcor will be speaking on. And it is a socially responsible investment product that creates sustainable jobs in a sector while maintaining an attractive return profile. So again, just to go into a little bit more depth on the product. So through the Section 12J investment, investors invest in a herd of cattle, which is managed on our partner farmer's farm, which is Beefcor. The cattle is invested, the cattle that is invested in is then sold to the abattoirs at whatever the prevailing price is at that time. And the investor's upside is driven by the cattle gaining weight, as well as the selling price that we sell the cattle for. And the investors participate in the agricultural sector in South Africa, which is the backbone really the cattle livestock industry, which is the backbone of the agricultural sector in South Africa. So practically in a diagram, how does this work? So we raise funds from our clients. The funds are deployed to a partner farmer, which is Beefcor in this case, and Beefcor then sources and procures the cattle on our behalf. So if we raise funds for 1,000 heads of cattle, Beefcor sources and procures 1,000 heads of cattle, then the cattle is managed and maintained by Beefcor for a period of roughly about 120 days, which is 4 months. And after the 120 days, the cattle are then sold under an offtake agreement with Beefcor at whatever the current market price is, and that the proceeds are then reinvested, and that process goes over and over again. It's repeated for a period of 5 years, which is the length of the 12J investment. The IRR, or the anticipated return for this investment, is 20%, and we do project to pay annual dividend of 10%. Ayanda will go into a little bit more depth on the numbers further down in the presentation. So just like with any investment, really, there are risks that are associated to the investment, but we have tried by all means to mitigate as many risks as possible in this investment. So the investment sector, so the agriculture is considered as a defensive type of investment, one in which where we expect constant dividend and stable earnings regardless of the state of the economy, because people have to constantly eat at some point, unless unless there's people eat something else besides food. The fund partners with Beefcor, an established farmer network with, the fund partners with Beefcor in this case, which is an established feedlot with over 30 years of experience. As I mentioned, Isak will speak a little bit about Beefcor and give us a little bit more context. The fund is also looking to expand to other partner farmers in the network partner with other farmers across the country. So the product risk mitigation. So with dealing with livestock, it obviously does happen that we can experience mortalities, which means some cattle can die from disease outbreaks, or there can be potential theft. So how have we tried to mitigate against this? So the investment the investment exposure is only for 4 months. It's only for a 4-month period. As I mentioned in this diagram on the left-hand side, our buying and selling cycles. So the 4-month period gives us an opportunity to actually hold the cattle for a shorter period of time. So it does reduce the risk slightly on that front. So we have the ability to liquidate the investment every 4 months, as I've just mentioned, and hold the money in cash in the event of any risk arising. So should we have a situation where there's a long-lasting disease outbreak, we do have the ability to liquidate the investment and hold the funds in cash until we have clarity on the industry. Beefcor provides us with a 99% guarantee on the cattle in the event of death. So they will replace cattle in a herd if the mortality exceeds 1%. Beefcor has secure facilities that mitigate against the risk of theft of the cattle, and Beefcor also has measures in place to prevent disease outbreaks through quarantine facilities and active buyers that continuously assess the impacted areas and not procure from such areas. So through Beefcor's experience, by leveraging off Beefcor's experience, we do definitely benefit from having experienced buyers that are buying cattle, and they know which areas to buy from and which areas not to buy from. And from a market perspective, how have we mitigated the risk? So through active assessment and review of the market by management to ensure the sale and purchase of cattle is completed at the correct time. So for example, there are instances where the cattle price is quite high, and we might maybe wait for a few more weeks until the cattle price comes down, obviously after having conversations with our partners Beefcor, and we then make a decision to maybe not purchase for a few weeks in order for us to be able to purchase at the right price. As well as the investment is locked in for 5 years, which allows the investment to absorb and manage the price volatility. So this potentially gives an investor an option to buy in 15 times, 15 buy and 15 sell cycles, which obviously makes it a lot better, because if we do, in some instances, experience a cycle where the return that we make from the sale of cattle is not as we expected, we do have the opportunity to recover as the cycles go on. I'll just hand over to Ayanda here to discuss that.
Thank you very much, Kagiso. So perfect. Good afternoon to everyone who's joined us today. Thank you so much for sparing the time and joining us on this webinar. I think for us, this is the first one in 2021, and it's the most exciting because for the first time, we actually have our partners on the webinar. So as Kagiso mentioned, we do have a representative from the 12J, and also we've got a representative from Beefcor. So this time around, you're not hearing it just from us, but you're also hearing it from everyone else that is involved. That is involved. So as Kagiso mentioned, today we're talking about the Section 12J cattle investment, and I'm going to take you through the numbers. So with any investment, really, we need to look at the numbers, make sure that we cross all the T's and dot the I's to make sure that our overall investment strategy makes sense. So the biggest advantage on this investment opportunity is the fact that you get a tax benefit of up to 45%. Now, this tax bracket may be different for different people because it's dependent on which tax bracket you're in. But the standing thing that will apply across to everyone is the fact that you do get a rebate and you do get this benefit. Now, for an individual, it could be completely different to what a company would get. It could be completely different to what a trust would get. But as long as you would have a tax rate applied to your tax submissions at the end of the financial tax year, then you would definitely qualify for a tax benefit. Now, what you see in front of you is an illustration of how the investment works over a 5-year period. Now, firstly, the investment category is 12J cattle backed. And with us as SV Capital, our flagship or our focus is to provide alternative asset-backed investments. And cattle has been our flagship product. And what we've done is we've taken our cattle investment and wrapped it in a Section 12J structure. Now, the reason to wrap it is the most beneficial part of it, that being the tax benefit that comes with it, but also this has an effect on the returns and amplifies the returns on an overall basis. Now, the investment IRR, or the return that is expected on this investment, is 20%. And we also have a targeted dividend structure in place. So we plan to pay out 10% as a dividend on an annual basis. Now, the reason why we put a dividend in play is to appreciate the fact that the Section 12J investment is a long-term investment because it is a 5-year investment. And the 10% annual dividend allows for a bit of cash in your pocket as an investor, allows for a bit of liquidity to allow you to have a bit of cash at the end of every year to do what you need to do with it, whether it's invest in other things or just have cash available for whatever needs you may have. Now, from our perspective, we do not charge an upfront fee, but we do have an annual fee of 2% that we charge on the total assets under management. So the way you can think of this fee, it's shared amongst all the investors that are invested in the specific investment opportunity. So we charge a 2% annual fee on all the assets that we have under management at that point in time. And part of our fee structure, we also have a performance fee in place. Now, the performance fee is an incentivized fee that we put in place to make sure that our interests are aligned with an investor's interests. So we only get the performance fee only if we've met a benchmark return rate. Now, the benchmark rate on this is 10%. So what this means is that if on the investment on an annual basis, we achieve a return of more than 10%, then we will participate on a performance fee basis. So basically the return above 10% will be split on an 80-20 basis, 80% going to clients and 20% coming to us. However, if we don't achieve that benchmark rate of 10%, then we don't participate and get a performance fee, and the entire return achieved would go completely to the client. Now, when looking at this graph on the screen, there's a few assumptions, and I'll go through it, but I'll also go through the assumptions just to help explain the numbers in this scenario. So we've worked on an assumption that you'll invest initially 100 Rand. Now, with this initial 100 Rand investment, from day one, you get a tax break of up to 45%. Now, as I mentioned earlier on, this will be different for different people. But for this specific example, we've worked with the assumption that you get 45%. So this means that from day one, you get 45 Rand back into your pocket. And this tax break is authorized and well known by SARS. So this is not the first time SARS would hear about it. Even upon submitting your tax returns, we provide you with the relevant documentation to prove to SARS that you invested in a 12J, and you will get the tax break as per your specific tax bracket. So in this example, the assumption is made that when you're investing the 100 Rand initially, from day one, you get 45 Rand back in your pocket. So what does this mean from a risk perspective? So when we're looking at the true essence of the risk, it means that only 55 Rand of your investment would be at risk. And how we've come to that conclusion is that if you've put down 100 Rand from day one, and SARS in essence pays you back 45 Rand, it means over the 5-year period, you've only got 55 Rand that is at risk. So if anything were to happen to the investment, if anything were to go downside, only 55 Rand would be exposed because you've already been paid 45 Rand upfront. However, when we calculating the returns, or when we look at your overall investment, we still look at it as you've invested 100 Rand. And that's the biggest benefit about investing through a 12J, because you get that upfront liquidity, if I'd say, or that upfront payout, but you still get your returns calculated on your total investment. With this image, we've also assumed an annual dividend of 10% paid out annually. So in this instance, it means that on an annual basis, you can expect a payout of about 10 Rand at the end of each year. And when I say year, I'm referring to financial year. Now, it's important to note that with the annual dividends, this is at the discretion of the fund managers. So we will look at the overall fund's performance, we'll look at the overall performance of the investment itself before we decide whether to declare a dividend or not. Also, on an annual basis, we charge a management fee of 2%. And that, as I mentioned a bit earlier on, that will be charged on the total funds under management. So that would be your investment alongside other investors' monies. And we've worked with the assumption that on the underlying investment, that being the cattle investment, could generate a return of up to 22% per annum. So when just looking at this graph, you can see that from day one, you get 45 Rand back. Over the 5-year period, you get 10 Rand paid out as a dividend. And at the end of the 5 years, you get a potential return of about 111. So on an overall basis, this investment has not only given you tax benefits, it's also given you better returns and amplified returns because you invested through this tax structure. And also at the end of the 5 years, your funds will be paid immediately into your bank account. So there's no need for a maturity instruction or an ask from us on whether you want to reinvest it or not. The funds will be immediately paid into your account. Now, when we look at the key partners that have come together to bring this amazing investment opportunity, we've had SV Capital come in as the alternative asset specialist. Then we've also got Fundamental VCC, which is our Section 12J specialist. And Fundamental, as we've mentioned, is on the webinar and will be going through a bit about themselves, so telling you a bit about themselves, their history, and also a bit more detail around the Section 12J investment and the benefits of investing in one at this point in time. Then we've got Beefcor, who's our farming specialist. Those who know our investment products know that we've worked with Beefcor over the past 2 years. So Beefcor has been our farming partner, and they've partnered with us to make the Section 12J investment available. And from a regulatory and tax compliance perspective, we've got Mo Stevens, who's looking after that. We've got Fluxmans, who's coming in as our legal specialist, and Baker Tilly, who's our external auditor. Now, next, I'd love to introduce our farming partner as represented by Isak. And Isak will be taking you through the farming process, which part of the value chain you're participating in specifically, and just an overview of the cattle industry. So what it means to actually invest in the cattle industry.
Thank you, Ayanda. Yeah, maybe I can start off with a little bit of history about Beefcor. We are a cattle feedlot industry, in the cattle feedlot industry. We're situated between Bronkhorstspruit and Bobsfontein on the R25. We have been established since 1973. We've been in operation, initially part of the ICS Foods Limited Group, but we privatized in 1998 to be a private company called Beefcor Pty Limited. Our feedlot capacity is 30,000 head of animals. We have the majority shareholding in Shamdor Abattoir, and then we have a wholesale distribution and meat deboning plant situated in Pretoria West. So what we do, we buy weaner calves from farmers throughout South Africa and Namibia, the southern part of Namibia. We do not buy animals in the foot and mouth areas, or that's been established in the northern part of Limpopo and certain parts of KwaZulu-Natal. So we avoid those areas, and we only buy animals mainly in the Mpumalanga, Free State, Eastern Cape areas, and then Namibia, the southern parts. We then bring the animals to the feedlot. They go through a processing where they will receive inoculations for the typical diseases, and they will pick up in a feedlot environment. We put them through the system. We feed them on a daily basis. We treat them if they will get ill. You do have some mortalities along the process. That's why we guarantee that mortalities will not exceed 1%. If it exceeds that, we take the risk of that. We do charge SV Capital or the investors a management fee for what we do. Then at the end of the period, we will slaughter them. Well, it's the investor's choice whether they slaughter it at Beefcor's facilities or whether they will source another buyer. It's all price driven. They will then, it will be slaughtered, and the money will be recirculated if the investor wish to do that. Otherwise, it will be paid out to the investor. I want to state that that's the service we provide. We're not involved with the investment itself. The money is invested in Beefcor, and we provide that service to the investor. The cattle industry is there's always risk, because we are price takers. Whenever we buy weaners, we will have to pay the market price for those animals. During the feeding period, which is roughly 120 days, we will have to feed them at feed sources and commodity price driven feed like maize, hominy chop, brewer's grain, molasses, etc. At the end of the period, we again are price takers in the market, as we have to meet the market determined price at that stage. So as with all agriculture, there are risks involved, but there's also good returns, especially when you read the market well, and there's certain periods of the year when you will do better, certain periods you will be less fortunate in your investment. Yanda, I don't know if anything else. Maybe going forward, we all know that the economy, both South Africa and the world, is under pressure with COVID-19 that happened. We don't know when it will stabilize. So the market is very volatile. It's one of the things you have to realize, but I think it's not only in the cattle or animal or meat industry. I think it's in all industries throughout. Let me see if there's something else. I don't know if I mentioned, standing capacity is 30,000 animals. Yeah, Ayana, is there anything else you want me to add?
No, Isak, I think that was perfect. That was absolutely perfect.
Okay.
Here.
I think introducing our second partners, being Fundamental VCC. I know Kai and Hans are both in the call, so I'm not sure who's going to be doing the talking, but I'll give it a...
Hello, everybody. It's Hans here. I'll be doing the talking, and I'll be supported by Kai, one of my fellow directors. So just a brief background to Fundamental VCC. Fundamental VCC is an approved Section 12J venture capital company. A Section 12J capital company is registered with both SARS, the South African Revenue Authority, as well as the FSCA, that's the Financial Services Board. And we have strict regulations and requirements that are imposed and that we abide by with both SARS and the FSCA. We were established in 2017. We're one of the older Section 12J funds around, even though it's only been 4 years. And we are probably in the top 5 VCC funds in South Africa. We have over 250 individual investors, and we have raised more than 400 million rand over that time period. And Section 12J is legislation that was enacted by the Income Tax Act. And I think Ayanda and Kagiso have both alluded to it previously. What Section 12J does, and put simply, is that for every 100 Rand you invest into a Section 12J fund, you are able to deduct that amount from your taxable income. SARS has imposed a couple of parameters on the Section 12J. The first is that your investment into a Section 12J company has to be in for a 5-year period. Investors are limited in terms of how much they are able to contribute on an annual basis. That amount is 2.5 million for individuals. So each individual is allowed to put in 2.5 million per tax year, and that's the February 28 February tax year. Companies are able to put in 5 million Rand per tax year, and trusts are able to put in 2.5 million Rand per tax year. Section 12J, as it currently stands, has got what they call a sunset clause, which effectively means that the current dispensation will come to an end at the end of June 2021. So as it currently stands, this February 2021 and June 2021 are the last opportunities of investing via a 12J fund. What the 12J fund does, in simple terms, is it adds 8% to your investment return. So if you historically would have made 10% on something, 12J will make that return 18%. And that is after taking into account entry and exit taxes. So our fund is a founding member of the 12J Industry Association. The Industry Association was established to inform and do various research on Section 12J, to try and ask government to extend the sunset clause, as the research and the evidence that we have found has shown that 12J has been a great net promoter of job growth. It's expanded the tax net, and it has significantly added to both income tax as well as other taxes such as VAT or payroll taxes. So we are founder members of that, and I sit on that Industry Association board as a director. The 12J fund has various members from left to right. We've got Oliver Barbeau, then we've got myself, and then Kai Roining, and Charles Reed, and Uwe Meyer. We have a combined 55 years of corporate finance and investment experience. Oliver Barbeau is vice chairman of Moore South Africa, and Charles Reed, second from the right, is chairman of Moore South Africa. And we pride ourselves on ensuring that we have the highest standards of compliance and governance, and we partner only with industry leaders in their respective fields. And in this specific investment product, we are supporting SV Capital in adding the 12J platform to the cattle investment. And just adding on to something that Isak said earlier, the cattle is cyclical, so it does go up and it does go down. And I'm of the opinion that the 5-year lock-in that 12J requires actually helps investors to not try and time those cycles, but actually you have every 4 months cattle can be bought and cattle can be sold. And if you take that, that's 3 cycles or liquidity events that you have in a year. So effectively, over the 5-year term, there are 15 times that you are going in and out of cattle. And I think that has a great averaging effect to ensure that investors get a good average return. And that average return is boosted by the Section 12J tax benefit. Kai, I'm not sure if you want to add anything on there that I may have missed or...
No, I think you've been excellent. Good afternoon, everybody. Just to say hi, and good to meet you all.
Perfect. So, yeah, we'll hand back to Ayanda and them, but if you do have questions, we're more than happy to answer them at the end of this session, but we're also happy to share our contact details. You can call us anytime, and we're always happy to talk 12J.
Thanks, Hans.
Thank you.
Definitely, I think there will be a few questions. I've seen some pop up already. So yeah, we'll take the questions towards the end. So just to also provide some context on SV Capital for those that don't know about us. So we're the alternative asset partner, as Ayanda had said. So SV Capital, which stands for Smart West Capital. So we're a specialist fund management company that focuses on alternative investments. So we were established in 2017, and we are 100% Black-owned company, and we offer innovative products. The Cattle investment being the flagship product, which we have wrapped in the 12J structure with the support of Fundamental, as well as using Beefcor's facilities. From an agricultural perspective, so our investments, we want investments to provide clients access to products that they've never had access to before. So typically when people invest, they would think of equity and they wouldn't necessarily think of physical assets like agriculture. So we really wanted to go, we wanted to go back into time and invest the same way as, traditional forefathers used to invest, being in cattle. And I think the cattle products is very relevant still in this day and age as we see. So also a little bit of context on SV Capital. So we were selected as one of the top 80 startups in South Africa, and given residency at the Global Entrepreneurship Network building in Bryanston. It's actually called 22 on Sloan. We're also selected as a top 45 companies by Orange Corners, which was an initiative by the Netherlands government in partnership with Shell, Philips, and we also were the runner-up of the African Investment Forum, and we came top with the run-up in the top tech startups on the African continent. So we have been around for what feels like 10 years, but it's only been since 2017. And myself and Ayanda are the two that are looking after SV Capital. Ayanda's got experience in mergers and acquisitions from Deutsche Bank. She's a chartered accountant by profession, and I am a former wealth manager from Investec. So these are our contact details here at the bottom. The next screen as well will have some of our contact details, but I've shared this presentation. So if I've shared it in the chat, so if you want to reach out to us, you can feel free to reach out to us on those details, or you can visit our website. The 12J section on the website is, it's quite clear. If you click on 12J, you'll be able to actually read a little bit more and download some documents.
Okay, perfect. So I guess in conclusion of going through this presentation, and after this, we can start taking questions. The next steps would be knowing that the minimum investment on the Section 12J investment is 10,000 Rand. As Hans alluded to, there are maximums in place. So for individuals, that's 2.5 million Rand along with trusts. And for companies, the maximum is 5 million Rand. While you can invest more than that, but your tax benefit will be capped to those amounts. And our target raise for this 12J is 20 million Rand. And we're cutting off the raise as at 27 February 2021. So that is around the corner, and we've timed it with the closure of the tax year this year. So for those investors that are interested, please feel free to contact us. You'll see our contact details on the screen, and we'd be more than happy to take you through any more information that you need or onboard you in order for you to start investing through the Section 12J investment. So I think, so this is a good time maybe to kick off some questions. I see we've got quite a few questions.
Yeah, we do. So I'll just start at the top and just ask the relevant partners, or we will just answer the question. So, got a question from Precious. So she says, hi, in the event that it is not viable to purchase cattle at a specific time, what happens to the funds invested by clients? My concern is really losing out on profits during the delay period.
Yeah, so I'm happy to take that question. Hi, Precious. Thank you so much for your question. So Hans did allude to the fact that because you locked in for a 5-year period, this allows you to go through all the positives and the negatives of the investment cycle. And over the 5-year period, it would have had an effect where it sort of normalizes your returns, and the effect is sort of your returns are normalized over the 5-year period. So you having to worry about losing out on profits is not really something to worry about, because we've also, as part of our investment strategy, we have constant communication with our farmer to see when is the best time to place, when is not the best time to place. And in doing that, we're actively managing the investment to ensure that all the positives and the negatives sort of come out to a normalized and positive return on an overall basis.
Then Precious again asked another question. Have you considered paying the returns at an interim interval of 12 months? So maybe to answer this question, so Ayanda did speak around the dividend payouts, and she also did specify that the dividend payouts are not necessarily guaranteed as what we are projecting to happen, and it is up to the discretion of the manager of the fund to determine what that dividend payout is going to be. So the dividend payout is on a yearly interval, and it's not really, you're not waiting 5 years to get something from the investment. We do anticipate to pay dividend at least once a year. Cool. And then Donald asked another question. Oh, Donald asked a question saying, why use financial year?
Yeah, so I think Donald's referring to the dividend payouts being linked to the financial year. So maybe Hans, if you don't mind answering this.
Yeah, the reason to have the dividend linked to the financial year is that at the financial year, we will be preparing audited financial statements, and those will be externally audited by Baker Tilly, and that gives the directors of the underlying company the comfort to declare the dividend once those audited financials are completed. So the dividend was really, the timing of the dividend was chosen to align to both the financial year end of the company as well as the tax year of the company. It just makes everything administratively more straightforward and transparent, as well as complying with good corporate governance.
Okay. Thank you, Hans. And then next question from Nick. Are the returns you are targeting based on gross or risk capital?
Maybe if I can take that. That's a common 12J question, I think, because a lot of funds do measure their returns on the at-risk portion. And what that means is that if you've invested 100 Rand and you have had a deduction, most 12J funds will say that you have had the benefit of 45 Rand tax back. So your at-risk amount is actually 100 Rand minus 45 Rand, which means that it's 55 Rand. So what that means is that any return is obviously amplified because it's off a 55 Rand base and not 100 Rand. I think what we've done is flip that on its head, and we don't use at-risk. We're using a total return. So if you've put 100 Rand, and we ignore the tax benefit that you've received on the return, so it's worked out on your total amount that you've invested, being the 100 Rand.
Thank you, Hans. And then Nick asked another question, follow-up question, I guess. Are your performance fees based on gross or risk capital?
Also gross.
Thank you.
So everything is measured off gross.
Okay. Another question from Nick. Are cattle also insured against stock theft? So maybe I'll answer that from an SV Capital perspective, and I'll just let Isak speak on it as well. So from our perspective, we don't insure the cattle. We get the guarantee from Beefcor, which is a 99% guarantee of mortality. But I'll let Isak speak on the theft and maybe give us a little bit of context as to what their experience is on the farm with regards to theft.
Yeah, thank you, Kagiso. Yeah, to insure cattle is very expensive. That's why we do not insure the animals, but I can state that, you know, in the feedlot itself, the animals are contained in a relative small area, which is fenced by cables. We have on-site 24-hour security, and since 1973 up until today, we've never had any theft out of the feedlot. It does happen on the veld. For ourselves, we also background animals, and it may happen there. But that's why for investors, we do not do include the background portion. We only do feedlot growth. So investor animals do not go on the veld. They go directly into the feedlot for those security purposes as well.
Thank you, Isak. Another question from Nick. Is there a delay in deployment of capital, and what percentage of capital are you targeting to deploy?
So I'm happy to take that question. So Nick, there isn't a delay in terms of deploying the capital. So as soon as we've closed out on the raising of funds for the Section 12J investment, we place an order with Beefcor as soon as possible. Now, we need to keep in mind that we are dealing with physical live animals, so placing orders and sourcing it may take a week or two, but as soon as we have the funds solidified and we've closed out the raising cycle, we start deploying. But the process of deploying doesn't happen overnight. It usually takes about 2 weeks to 3 weeks for the cattle to actually arrive on the farm. And in terms of what percentages of capital are we targeting, what percentages of capital are you targeting to deploy? So we work a mix of about 65 to 35. So I'll say 65 to 70 to 35 to 30%, where the 65 to 70 is deployed to purchase cattle, so the physical livestock. And then the remaining 35 to 30% is used to service the monthly costs. And Isak had alluded to it that we do pay a management fee for their services as Beefcor, and we also do pay for any feed that the cattle have been fed over that said period that they're in the feedlot, and any other operational expenses that are incurred in running the entire investment. So that split to date has worked well for us because we're able to maintain the number of cattle on the farm and also be able to maintain the monthly costs that come with running the entire investment.
Cool, thank you. And there's a question from Donald. He says, what are the chances that we could lose our investments? So I'll take that question. So Donald, as I mentioned earlier, that this investment does have risks that we have tried to mitigate as much as possible. It's definitely not a risk-free investment. We have tried to mitigate the risks as much as possible by putting things in place and also partnering with experienced players in the market, such as Beefcor. So there is a potential of losing your investment. Definitely, there is a potential, but we have done all that we can to try and mitigate the risks, and it's something that we're continuously evaluating with regards to the market risks, either pricing or purchase price or selling price, to make sure that we do deliver the best outcome for our clients.
Kagiso, sorry, Hans here from Fundamental. Sorry, yes. If I can maybe just add to that, I think, whilst we don't measure ourselves on at-risk capital and we don't charge fees based on risk capital, certainly the fact that the investor has had a tax refund or was able to deduct the tax from provisional tax is a significant downward protection for the investor, because you've effectively haven't invested 100 Rand, you've only invested, let's call it 55 Rand or 60 Rand. So even if everything was to go completely bust, which is highly unlikely, and I take Kafisa's comment on board in terms of the partnership with Beefcor. Even in that absolutely unlikely event, you're only ever going to lose the 60 Rand. You've actually had the 40 Rand back in your pocket. So I think that's quite an important differentiator when it comes to doing the investment via the Section 12J.
Yeah.
Thank you.
Thank you, Hans. Precious asked another question. May you kindly explain the relationship between SV Capital, Beefcor, and the 12J partner? I just want to understand how everyone is involved in giving effect to this investment.
I'm happy to take that, Kagiso. Do you mind going back to slide 6? Because that has all the partners we're working with. Yeah, perfect. Hi, Precious. So to answer your question, so SV Capital comes into this, I'll say, relationship as the alternative asset specialist. So we manage the investment. We do the hands-on day-to-day running around to ensure that the investment is operating as planned. Then we have Beefcor, and Beefcor comes in as the farming specialist. So Beefcor would be sourcing the cattle, looking after the cattle on the farm, vaccinating, feeding, and thereafter selling them or marketing them when they're ready for slaughter. And then we've got Fundamental VCC, who's our 12J partner. So Fundamental VCC is a 12J in itself, so they provide the structure to us. So from an FSCA perspective, they have an FSCA number. They are regulated by the FSCA. So from a structuring perspective, the entire structure sits with Fundamental. And what we've done is we've just taken the structure and put in the cattle investment that SV Capital had already been running. So what this means is that from a structure maintenance, from the legal agreements, everything relating to the Section 12J, Fundamental would, I'd say, manage that part. I use the word manage loosely, but look over that part. Everything relating to managing the investment, be it reporting, be it ensuring that the monthly costs are accounted for, and so on and so forth. SV Capital is in charge of that. And then from a managing the physical cattle on the farm, ensuring that they are fed, ensuring they have medicine, ensuring that they reach the slaughter weight that is required, Beefcor would take over that. And when we start bringing these three powerful entities together, we've created an entity called AgriFund. Now, I have to mention that AgriFund is actually a separate SPV in which this entire investment runs in. So the reason why we've put it in a separate SPV is for it to be ring-fenced from other operations. So it's a risk mitigant measure we put in place. So the entire investment is run from this vehicle, but all parties have their roles to play to ensure that the investment performs at its best levels.
Okay, thanks, Ayanda. Donald asked a question. Apparently, SARS is paying attention to Section 12J investments. Any comments?
I think SARS pays attention to any incentive really where taxpayers have had a deduction. We certainly we have bi-annual reports which go into SARS. We have appointed a key individual. We have extensive tax opinions to cover every investment that we make. So I certainly think that SARS will be paying a lot more attention to Section 12J funds going forward. And that's why it's important to have a robust and compliant fund structure, which is what we have in Fundamental VCC, to ensure that it stands up to scrutiny. I think where SARS has got a particular gripe is around the use of Section 12J funds to invest in effectively holiday homes. So there are quite a few Section 12J funds, not quite a few, it's probably a handful. You know, it's always a couple of people that spoil the party for everybody. But there are a couple of funds that have done holiday home type investments, and that's clearly not in the spirit of 12J. So when SARS walks through the door, and those people will have a day of reckoning. But certainly from a Fundamental VCC perspective, yeah, we don't have any qualms. We operate within the spirit and the law of 12J, and especially something like this investment with SV Capital is completely aligned with Section 12J and what it is trying to achieve. Hope that answers it.
Thank you, Hans. Donald also asks, what is the purchase price of each cattle? So I'll just give you a quick answer. There isn't necessarily a set purchase price. So as we mentioned earlier, the price is a function of the market. So it depends on two things. One, what the market price is, and two, what the weight of that animal is. So we purchase cattle per kilogram. So you might find that we purchase two heads of cattle as an example at the same price, let's say at 35 Rand a kilogram, but the invoice will show two different prices because one cow might be 250 kilogram and another one 300 kilograms. So there isn't necessarily a set price for purchasing a cow. And also he asked, is the 10% guaranteed each year? And I don't know if you want to take that.
Yes, happy to. So the 10% dividend we put in place as part of the Section 12J investment in itself. So as the fund managers, we will decide at the end of each financial year whether to declare the dividend or not. There's a few factors that we consider when determining whether to declare the dividend. We'd look at the performance of the fund, look at the performance of the underlying investment, because as I think Kagiso and Hans had mentioned, we turn over the cattle quite a few times, so up to, I think, twice a year. So depending on how that performance is, then the fund managers will decide whether to declare the 10% dividend or not. I hope that answers the question.
Thank you. And then Majola S asks, hi guys, what happens when you don't reach the intended target of 20 million? Since it's a 5-year product, can I opt to remain invested at a reduced length after 5 years? So,
I think Hans, maybe.
Yeah.
Did you want to take that, Kagiso?
I'll let Hans take it.
Yeah, unfortunately, the 5-year lock-in period, that's not something that one can amend. So it is a 5-year product, and you do need to remain invested for the 5-year period. Certainly, the dividends will be paid out during that 5-year period. But yeah, you would have to be invested for the full 5-year period. The 20 million Rand is a targeted raise. If we were not to get to the 20 million Rand, I don't think it would necessarily jeopardize the opportunity. That is our initial targeted raise. But I think we would probably go forward, or we would go forward with a lower amount.
Thank you, Hans. Siva asked the question, yes, the farm is secured, but but in the case of stock theft, what does SV Capital do? So just to answer your question, Isak did allude to it, that we have an agreement with Beefcor where 99% of our cattle are guaranteed. And we allow for a 1% mortality. And Isak then further explained to say that theft on the farm hasn't happened since, I think, 1986. I'm not sure. If you correct me, please, if I'm wrong, Isak. And he also mentioned that in the backgrounding, that's where theft, for example, has maybe taken place. And that is not part of the feedlot that we participate in. We don't background the animals. Our animals are feedlotted on the farm, on the main farm. And he also further explained to the security on the farm as well. So hopefully that answers your question. Another question, in the 4-month turnaround time, is the 4-month turnaround time automatic or upon assessment of the cattle and or the market? So I don't know, Isak, I don't know if you would like to take that question.
Yes, I'll take it. Unfortunately, with cattle, there's not a pause button on the growth. So it's roughly 120 days. I say roughly because it's living beings and not, and each one performs differently. So some will go quicker through the system and some will go slower. You can maybe hold it back for a week or two, but then it will start getting to fat, and then the price will be compromised at slaughter because you get penalized when animals are over fat. So the sweet spot is about 120 days average, and we target the A2, A3 market. Just to explain that quickly, the A grade, that means a young animal. And then you've got a fat layer from 0, which is no fat, up to a 6 when it's over fat. So the sweet spot and the nice rump that you will have in a restaurant is the A2, A3 market. That's where you hit the highest price. So just to repeat myself, we can push it back just a little bit, maybe to hit a month end. But you can't push it back indefinitely. It will get over fat.
Thank you, Isak. Nick says, thanks. Thanks, guys. I appreciate the transparency. Lester says, this is absolutely brilliant. I'm loving this. And Donald asked, I see that VCC require a minimum of 100,000 Rand investment. Is this under SV Capital, SV Cattle or other partners? Just to answer you, Donald, for this specific investment, the minimum is 10,000 Rand. So 10,000 Rand is the minimum investment for the Section 12J investment. And other products have got their other minimums as well, which are quite clear on the website. You can have a look at the website.
So maybe just to add to that, so the 10,000 minimum is for the Section 12J cattle investment through SV Capital. Yeah, so it's through SV Capital.
Okay, cool. I see that's questions. Let me just see. Yep, that's all questions. So as we mentioned, I've shared this presentation in the chat, and also you can feel free to visit our website where you'll be able to download the presentation as well. But if you do have any questions, feel free to contact SV Capital. We'll be more than happy to answer any of your questions. And if anything was unclear here and you would like to take it offline, we also have to arrange a call or conversation with you or with anyone else that you'd like us to speak to explain this to. But yeah, our partners,
so maybe to jump in before we leave, I thought it would be quite nice if we go through a few frequently asked questions that we dealt with in the past for everyone's benefit. So I guess I'll start with the first one. And the question is, can an investor reinvest the dividend paid out on an annual basis? I don't know if Hans or Kai wants to take this.
Yeah, so you wouldn't be able to reinvest that dividend. That dividend would accrue to you and would be paid into your bank account.
Okay. And another one is with the sunset clause, and I believe Hans, you had mentioned that the sunset clause is coming into effect at the end of June 2021. So how does this impact the investment?
So any investment that is done before the 30th of June 2021 is under the current dispensation, under the current Section 12J rules. So it's business as usual, but you will not be able to make this investment as the legislation currently stands on the 1st of July, as an example. And we wait for clarity from National Treasury. And like I mentioned, the 12J Association is doing a lot of lobbying, a lot of informing, and there's quite a bit of media around how Section 12J is beneficial to the country. So we hope that gets taken on board so that more people are able to benefit from Section 12J going forward. But just to reiterate, as it currently stands, there is no extension. So you have until the end of June to make a Section 12J investment into SV Capital.
And then another question is, how does the tax break work exactly?
So our tax system has two types of taxpayers. You have what is called a provisional taxpayer. Provisional taxpayers pay their tax at the end of August and at the end of February each tax year. And the other type of taxpayer is the PAYE taxpayer. Those are the taxpayers where your tax is deducted from your monthly salary. So if you are a provisional taxpayer and you get to the end of February, and if you have a taxable income of 300,000 Rand and you have to pay, as an example now, 100,000 Rand worth of tax, if you were to invest 300,000 Rand into the SV Capital cattle opportunity, your calculation will be as follows. You'll have taxable income of 300,000 Rand. You will deduct the 300,000 Rand that you have invested, and you will be left with 0 taxable income. And as a result, instead of paying 100,000 Rand tax, you'll pay 0. And the second example is the is the PAYE taxpayer. So as at the end of February, you would have paid all your monthly PAYE, which your employer will deduct from your salary and pays over to SARS on your behalf. When the tax season opens, let's call it July, you will submit your tax return. That tax return has a specific checkbox that asks whether you've invested into a Section 12J fund. You simply tick that box and insert the amount, and all other things being equal, you'll be entitled to a refund, and that refund is processed by SARS and paid out into your bank account. And refunds are typically not straightforward with SARS. They ask for supporting documentation, and they are able to, or they do draw out that process, specifically when it comes to travel allowances and things like that. From our investors, we've only had, if I can recall correctly, and Kai can correct me, I think we've only had 3 cases where we have had a request for that supporting documentation over and above the tax certificate, which we issued to the individual taxpayer. And we have to date not had any issues with tax refunds being issued to our individual investors.
Perfect. And another question is, am I physically buying shares into the company that holds this investment?
Yes, you are. So you will enter, from a legal perspective, you will enter into what is called a subscription agreement. So the Section 12J company, Fundamental VCC, will issue you with shares in a specific share class of that company. That specific share class, let's call it share class Golf. Share class Golf will then purchase shares in the underlying company. And in this case, it's AgriFund Dios, which is AgriFund 2. So yes, you will be subscribing for shares in share class Golf, and share class Golf will in turn be subscribing for shares in AgriFund Dios.
Okay, perfect. So that's all the questions from my side. I don't know, Kagiso, if you have any questions from your side?
No, I don't have any questions.
Okay, perfect. Well, thank you so much for everyone to join us today, this evening. As mentioned, that the next steps are the minimum investment on the Section 12J is 10,000 Rand, and the cutoff date will be the 27th of February 2021. So if you are interested, or if you want to chat a bit further about the 12J, the mechanisms, the cattle investment, please feel free to contact us. Our details are up on the screen. You can send us an email or you can call us, and we're more than happy to take any further questions. We really do thank our partners for joining us today on the webinar. Thank you so much, Fundamental. Hans, Kai, really appreciate it. And thank you so much, Isak, for joining us from Beefcor's end. We really appreciate this. And as for our investors, once again, thank you for joining us, and we look forward to hearing from you.